prices are supposed to continue to rise, the Fed cuts their rate, and we're going to see what the experts say here on Will County's Real Estate Junkies. Welcome to our first actual true full episode of Will County's Real Estate Junkies. We're going to get right into it. Equity is supposed to increase over the next 5 years. So the home price expectation survey went out, and it helps target these projects that are going on throughout the country and what's going on. And the results are from the second quarter. Home values will appreciate by 4.1% in 2019. The annual average appreciation will be 3.2% over the next 5 years. So what does this mean? It's the reason we got into real estate, folks. This is all about building your net worth, building your equity. You know, you have the ability to call in that equity for big projects, for certain things, whether you're looking to invest in a new business, whether you're looking to put a kid in college. That's what this equity can be used for. Let me explain what it really means, though. In 5 years from today, if you bought a house at $250,000, it's going to be worth $292,000 in 5 years. In 5 years, you're going to have $42,000 in equity. $42,000. So the survey's great. The shows that the market is still moving forward, and the market is doing very, very well, and real estate is one of the biggest and best investments you can make in today's market. Now the headlines. So new home sales rebounded in June. The market didn't get what it wanted, however. The experts forecast that sales were up 7% to a seasonally adjusted annual pace of 646,000 units. Experts were hoping for 660,000 units. The June sales were 4.5% higher than a year ago, but they did mark the previous 3 months in a revised downward movement. Last week, the Fed did cut the rate for the Federal Reserve 1/4 point. It's the first cut since 2008. Lawrence Yun, the chief economist at the National Association of Realtors, said that the world economy was slowing down while the U.S. has actually done quite well with unemployment rate less than 4%. Dr. Yun feels that the rate cut is heading off potential downturn in the market and will be good for consumers. ImproveNet recently surveyed and found 70% of homeowners are not living in their dream neighborhood. The number one thing for their dream neighborhood was close grocery shopping. Coming up later, the local market update. Why is now the perfect time to sell your home? Because the market time is still lowering. That's right, the average market time right now is 27 days nationally. That is down from last spring of 37 days. While that is going on, we are seeing increases in buyer traffic and decreases in seller traffic. This is going to make for a very competitive market going into the sector. We're going to probably get back into seeing multiple offers. So if you are considering buying a house right now, you want to move quick and fast, especially as we see rates continue to lower, giving you great opportunity to increase your buying power. Market update. All right, here we go. We're going to start off with Plainfield. Plainfield, Illinois was 9.6% up in new listings. They were 26.6% down in closed sales. Inventory of homes was up 14.3%. Median sales price in Plainfield is $270,500. That's up 3.6%, and that is the trailing 12 months. On attached houses in Plainfield, if you were looking, you would find $185,000 as your median sales price for the last 12 months, and that is up 4.2%. So trending with what is going on in the rest of the country. Joliet is 1.5% up in new listings, 16% down in closing sales, and 25.7% down in inventory. Median price in Joliet is $174,900. That is up 6.6%, beating the national average. The attached median price is $165,000. That is up 5.8%. Also beating the national average. So Joliet is doing really well when it comes to price, but still struggling when it comes to inventory. So I want to just follow up with all these numbers coming out and the Fed cutting their rate. Wanted to look at some of the stuff coming out from the talking heads, the industry experts, and seeing what they're saying. First, once again, Lawrence Yun, chief economist at the National Association of Realtors. Imbalance persists for mid to low priced homes with solid demand and insufficient supply, which is consistently pushing up home prices, which we're seeing as we saw the numbers in Joliet. And even still in Plainfield, you're still seeing a good growth. A lot of the other areas in the surrounding Will County community is following the same trend, mainly because we are leading and one of the state leaders in job growth. So, Mark Fleming, chief economist of First American, market conditions are ripe for increased home sales, with one glaring homes for sale remains tight, keeping existing home sales below potential. So, once again, they're talking inventory. So if you are thinking of listing, now would be the right time. Last but not least, Daniel Hale, chief economist of Realtor.com. We're not seeing as many new listings coming up on the market. It was only 18 months ago that the number of homes for sale hit its lowest level in recorded history and sparked a fierce competition among buyers we've ever seen. So again, looking at what's coming up for the end of the year, just the final thoughts. I do think we're going to see a tightening with home supply. If you are looking to buy, it's a great time to make the move, because some of the other numbers that came out recently, we did hit a little bit of a dip, and then property values are starting to go back up. With the property values going up and the rates at a low, you can really pick up a deal now before they start increasing over the next 5-year term. Thanks a lot, guys. I hope you enjoyed the show, and we hope to be bringing you a lot more and a lot more often.